Hey traders, in this video I want to show you guys a hack to make your backtesting process significantly faster. This one's a little bit different to my normal Pine Script lessons. In this video I'm going to be showing you how you can use Pine Script strategy scripts to significantly speed up and optimize your backtesting process to make it way faster. Now, before we start, full disclaimer, this is an imperfect science. There are potential issues with this approach to backtesting that I'm going to show you today. It's very important you watch the full lesson, pay attention, because I do explain my thought process, the pros and cons of this approach throughout the lesson. But what I'm going to show you here is how you can export your strategy data from the TradingView strategy tester and convert it into a spreadsheet so that you can compare the trade metrics, the strategy performance metrics of multiple markets and get a better grasp on the max drawdown, the total return, drawdown duration, and all of that sort of thing using simple spreadsheet. Well, this isn't a simple spreadsheet, but you can use a simple spreadsheet. You don't need to use this spreadsheet you see here. This is my personal trading spreadsheet that it's taken me years to build. You don't need to use this particular one. I'll link you below to a more simple one that doesn't have as much overwhelming information in it. If you want this one with the full bells and whistles, I include this in my Indicators and Strategies course. I also include the source code to this particular script you see today in that course, which includes full Pine connector and automation integration. It's completely ready out of the box to start auto trading through Pine connector, and I have been auto trading the script for the past 2 or 3 months. And the whole reason I'm making this video today is because I've been running into an issue, which I'll explain throughout the lesson, that I needed to address regarding my max drawdown and trading multiple markets. And today's lesson is going to show you the fastest method that I have found to analyze my strategy scripts, at least in a preliminary fashion. I do like to manually confirm any automated testing results that I generate, but we'll cover that throughout the lesson. So with all that said, let's get started with today's lesson. So in this case, I have a script on my chart. This is an inside bar momentum strategy. I'm not going to go into how this strategy script works because I cover that in my Indicators and Strategies course, where I will be breaking down the source code. But for now, I just want to use this script as a great example of how this hack works. So basically what we're going to do here is we are going to export all of our trade data, the list of trade data here, into a spreadsheet. And then I'm going to convert that spreadsheet into like a backtesting template kind of thing. What this will allow us to do is combine multiple markets. So here on the right side of my screen, you can see I've flagged every market, every Forex market that is profitable with this strategy, significantly profitable. So if I click on some of these, let me just quickly go through. I'll just keep hitting space. Keep an eye on the top right corner here where my mouse is. And you can see that some markets are not profitable at all, while other markets are decently profitable with this strategy. Now the problem is, and actually the problem I've been having with automating this strategy is that I don't know the drawdown. I don't know the max drawdown when trading multiple pairs. So all of these pairs, I think the maximum drawdown of any single pair is around 12%. Any of these pairs I've got flagged. Some of these are way higher than 12% max drawdown. But the problem I was having with automating the strategy on multiple markets is when it hits a losing streak, I don't know how bad that losing streak is going to get. Imagine if how many pairs do I have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I've got 12 markets here that are profitable with this strategy. If I automate the script across all 12 of these, first of all, I don't have enough money in my account balance to handle the margin requirement of opening 12 simultaneous trades, at least not yet. Maybe if the strategy does well, I'll throw more money in. But the point is, if the script trades all of these markets at the same time and all of them have a losing streak, let's say all of them lose 2, 3, 4 trades in a row, which is not uncommon for any strategy, even with a high win rate. If that were to happen simultaneously across multiple markets, I could be looking at a 20, 30, 40% drawdown on my account if I'm not careful. And so what I want to do is I know that this strategy is profitable on a bunch of markets. What I don't know is the max drawdown when combining all of these markets. So that's what I'm going to do today. I'm going to show you how to export this trade data into a spreadsheet and then combine all of these markets into a single spreadsheet so we can track the max drawdown. So let's do it. It's actually not that difficult. There's a few steps involved, but I'll show you how we do that now. Let's start from the top. Let's start with Aussie dollar. Now this applies to any strategy script that you throw on your chart. The catch here is that it will only work with a fixed target. So in this particular case, this strategy takes a 1-to-1 profit target. So if I have a 10 pip stop loss, I have a 10 pip target. And so my reward is identical to my risk. So if I risk 1%, I make 1% on a winning trade and obviously lose 1% on a losing trade. So that's important to mention. It may be possible to do this with a variable profit target, like a dynamic profit target that changes on each trade. I haven't looked into doing that yet because most of my automated strategies use fixed target. In fact, all of my automated strategies at the moment use a fixed target just because it's just simpler to work with. There's less that can go wrong when you're using a fixed target with an automated system. I'll be experimenting as I get more confident with my automated trading. I'll be experimenting with other profit-taking techniques, but for now I just use a fixed target. And so this technique works with most of my strategy scripts. And this is how it works. Throw on any strategy script with a fixed target. In this case, I'm using my inside bar momentum strategy. Open up the tester, and then we have this export button right here. If you click on that, it will copy all of this data onto your clipboard, and we can paste that into a spreadsheet. You can use Excel if you want to. If you're more proficient with Excel, then of course you can use that. I'm more proficient with Google Sheets. That's what I use for my own testing just because it's online, cloud-based. I can access it anywhere. So I use Google Sheets. That is my preference. So I'm going to copy this into a blank spreadsheet here. I'm going to click on this first cell and paste in all of my data. Now there's a lot of data here. Most of it is useless to me because I don't care about my contract size. I don't care about cumulative profit and run-up percent and all this crap. I just want to get a clean list of every trade this script took and whether it won or lost. I don't care about the direction either. You can track that if you want to, but for me, I just want the date the trade was taken and whether it won or lost. So I'm going to delete all of this data from the top. And then what I need to do is sort my spreadsheet by type. The reason for that is that we don't want any of this data, all these blank cell data. We don't want this. And so if we sort our spreadsheet by type, by the B column, that will allow us to get rid of all of our entries. We don't want any of our entry cells. We just want our exit cells. This is where it tells us whether the trade won or lost. Now the catch here is that the date time is going to be a little bit off. It's not going to track the date and time that the trade was opened. It's going to track when it was closed. But for the purposes of what I'm trying to do here, that doesn't matter. I don't care about that. So let me sort my spreadsheet by the B column by clicking on the B column and clicking data, clicking sort sheet by column B, A to Z. Click that. And now if I scroll up to the top of my spreadsheet, I can delete all of this data here. If I scroll down until we get to this section here, about halfway down the spreadsheet, I want to delete all of this info here that does not contain the exit price and profit. So I can hit delete here. And now if I scroll to the bottom of this data, that is where our column names will be, column titles. And now what I want to do is, first of all, we can delete a lot of these columns. I can delete that. I can delete that. I can delete that, that. The only columns I want is the date and the profit. So this is profit in dollars. A negative number just means the trade lost, obviously. A positive number means the trade won. That's the only data I need. So I can delete all of these other columns as well. Now I have everything I need in order to convert this information into a backtesting spreadsheet. So now what I want to do is delete these titles, sort all of this data by date and time. So I need to come back up to data and click sort sheet by column D this time. Now when we scroll up to the very top of our spreadsheet, we have all of our trades listed by date and time and the monetary gain and loss. Now, to convert this into a backtesting spreadsheet, I just need to get a positive number if the trade won and a negative number if the trade lost. So to do that, I can create a spreadsheet formula here. I can say if, open parentheses, G1 is less than 0. So if you're not familiar with spreadsheet formulas, it's pretty much the same thing as Pine Script, just the syntax is a little bit different. And here what we need to do is put in a comma, and now the next value we put in is what this cell will be filled with if that condition is true. So if G1, the cell G1 is less than 0, that's a negative number, that means we lost the trade. I need to put -1 there. And if I put another comma in, this is the value that gets put in the cell if that condition is not true. So if G1 is not less than 0, that means it must be a positive number. And so we won that trade. And so I just want to put 1 in there. And now if I close off that parentheses and hit enter, this little suggestion will pop up if you're using Google Sheets. And we do want to autofill this entire column. But if you accidentally click off this and you don't get the chance to click the tick button, you can still fill all of these cells by just clicking on this cell, click on this little square down the bottom here, click on that and drag all the way down to the bottom of your data. There's quite a few trades taken here. And so now if you look through here carefully, we have a bunch of 1s and -1s. This whole column now represents which trades won, which trades lost, and the date and time that happened. So now if I scroll up to the top of my chart, the problem we have now is if I try to copy all of this data into my spreadsheet, the Google Sheets at least, I don't know how Excel works, but Google Sheets will not copy the values, it will actually copy the formulas. And so when I paste this information into a different spreadsheet, it will copy the formulas, and so we won't get an accurate reading. It will actually, all of these numbers will be based on whatever's in the G column on this spreadsheet. So what I need to do is click on the column title here, the H column, select all of these cells, copy them, Control C or Command C on a Mac, or just right click, copy. And then in any other cell here, I need to click in a cell, right click, come down to paste special, and then paste the values only. We do not want the formulas, we just want the values. So now if I paste the values only, and if you double click on the cell, it now doesn't contain a formula, it's just the values that we generated here. Now what I can do is click on that column, copy all of those values, jump over to my backtesting spreadsheet. There'll be a link beneath this video to this spreadsheet template if you need it. If you have your own spreadsheet, this will work just fine, depending on how you've set up your formulas. But what I need to do here is paste all of those values into my target column. So this spreadsheet allows for 2 targets. By default, the second target is ignored. So we're just dealing with a 1 target system here. And so now if I paste in all of my values into my target column, there they are. Now what I need to do is just put 1 for my stop loss. So technically this normally counts the pips per trade that you win and lose. But as I said at the start of this video, since we are using a fixed target, it doesn't really matter how many pips we won or lost because I'm risking a set percentage per trade. And I don't care if I won 1 pip or 10 pips or 100 pips, that means that I won 1% or lost 1% of the trade lost. So what I can do now is, first of all, let's paste in all of our dates. So I'm going to click on the date column here, paste that into the date column on this spreadsheet. I'm going to change the market. So this is Aussie dollar we're dealing with here. And now I'm doing this on my template spreadsheet. I should have been doing this into a unique spreadsheet. So let me duplicate this really quickly before we proceed. And let me rename this sheet to AUD USD. I can highlight these 3 columns, drag it all the way down to the bottom of our dates list and our targets list. There's a lot of trades there. And now all I need to do is drag this 1 all the way down to the very last trade in this list. And once I do that, the spreadsheet will automatically generate all of my trade metrics. So we have my total gain percentage, my max drawdown percentage, my win rate, and the monetary gain. And that's it. I also track a bunch of other metrics in my spreadsheet, such as which days perform the best. You can see here that Mondays are actually quite bad for this strategy. So on this particular pair, Aussie dollar, maybe it would be worth adding a filter to this script to not take trades on Mondays, since it's not profitable. In fact, it's far from profitable. A 1-to-1 target with a 43% win rate is terrible. We need to win at least 50% to break even, and that's not even including commission costs and spread and the cost of trading. So Mondays are not profitable for this strategy. That's something to note. And I should add a filter to Aussie dollar to not take trades on Mondays, but that's outside the scope of this lesson. Maybe we'll cover that in a different lesson if you guys are interested in strategy optimization. But for now, we'll just leave it as it is. It's still profitable, but it would be more profitable if we didn't take 91 trades with a 43% win rate. So keep that in mind. And anyway, there we go. We have our data here. Let me tidy up some of this information. And we'll move on to doing this whole process again with a new market. So let me duplicate our template. I'll only do one more pair here to save time. The process is identical for multiple pairs. But for now, let's just do CAD Yen. I think CAD Yen was the next one on my list. Yes. So now we do exactly the same thing. I load up the CAD Yen strategy data. I export it, click that button. Now it's copied to clipboard. I can click OK. I can open up my blank spreadsheet here, create a new tab if you want to, or new sheet if you want to. Paste all of that data in, and we do exactly the same thing. I need to delete all of this header data. I don't care about that. I need to sort by the B column, the type column. So let's sort our sheet by type. Now I can scroll up and delete all of this data down to where our trade win and loss metrics are beginning to be tracked by the spreadsheet. Delete all of that useless data there that we don't need. I can scroll down to the bottom of this data to where our titles are, column titles. I can delete these columns, all three of these, and I can delete all of these up to profit. We want to keep our profit column, but get rid of all these other columns. And now we can delete our two column titles here, scroll up to the top, and or maybe not quite to the top, and click on the D column. We need to sort our column by date and time now. So let me click data, sort sheet by column D, scroll all the way up to the top, and now we need to do the same thing we did last time, equals if, open parentheses, G1. If G1 is less than 0, put in -1, otherwise put in +1, close that off, hit enter, and we didn't get the option to autofill this time, maybe because I did this in one column over. If we did it in this column, I think it would suggest the autofill, so that could be one way to speed up this process. But anyway, let me click on this little box and drag it all the way down to the bottom of our trade data list and stop there. Scroll back up to the top, select this column, copy, and then right click, paste values only, copy that column, jump over to our backtester spreadsheet. I can change this to CAD Yen, paste in our targets, paste in our date and times, and then I can drag all of these down to the bottom. I'll show you why this is important in a moment, why we bother tracking that data. There we go. Now I can do the same thing here, hit 1 and drag this up to the top. There we go. And now we have our trade data entered into the backtesting spreadsheet. And notice that these metrics are identical. If I jump over to my chart, 57.68% return, 11.47% drawdown. Same numbers here, 57.68% return, 11.48% drawdown. Close enough. There's a rounding difference there on the final digit, but these numbers are accurate, at least as far as our script is. If your script is inaccurate, obviously your data is going to be inaccurate. Some of these trades may have lost instead of won because a spread, maybe price got really close to our stop loss but didn't quite touch it, and the script didn't record it as a loss, even though our broker would have stopped us out of the trade. Keep that information in mind. Use this at your own risk. It's not a perfect system, but it is a fast way to quickly analyze your strategy results and see which markets perform well together, potentially. You still need to manually confirm this. Demo trade it if you can for a while, or at least on a small account balance that you don't care to lose before you start risking any serious amount of money with this sort of approach to strategy development and optimization. But anyway, we have two spreadsheets here now filled with data, time and date, and win and loss data. We can now merge these two spreadsheets to see how they would have performed together. We can see how Aussie dollar performed with CAD Yen in terms of its max drawdown and total return over the past couple of years of data. We're starting from January of 2018 until today, which is November 2021. That's a lot of data. That's 438 trades. So we can merge these two spreadsheets and see how these performed together. Let's click on this little plus sign to add a new blank sheet. And then what I need to do, we'll start with CAD Yen. Click in the top left cell here, the very first trade that's recorded. Scroll down to the bottom here where our trade is no longer, where our final trade was taken by the script. Select all of those cells, copy, paste them in here, and then do the same thing for Aussie dollar. Copy the first cell all the way down to the last trade, copy, scroll down to the bottom of this data, this list of data, and paste this under CAD Yen. There we go. We now have both markets on the one spreadsheet. All that's left to do is sort this spreadsheet by date and time so that we get the correct order of trades taken by these two markets. So if I click on the D column, click data, sort sheet by column D, done. We now have all of our markets that we have combined, sorted by the correct date and time. And if we had multiple markets here, other than two, this would still work. So that's why I'm only showing you two Forex pairs here as an example, because these steps apply to however many markets you want to combine. So now all that's left to do is we can copy all of this data and Control C. Now, if I duplicate my template spreadsheet here, I can rename this. Let's just call it portfolio for now. This is a portfolio of all of the pairs I want to trade. Delete that data, click on the very first trade cell here, and you can either just paste this straight in and it should work just fine, or you can right click and click paste special values only. I'm just going to paste in all of that data as I normally would. And here we go. We have two markets combined, all of their metrics combined. Our win rate on Monday is jumped up to 53%. So CAD Yen obviously does well on Mondays to increase our win rate on Aussie dollar from 43% to 50, whatever it is. If we look at CAD Yen must do quite well on a Monday. Very well, 63% win rate on a Monday. So that's interesting, isn't it? The Australian dollar doesn't do well on Mondays, but the CAD Yen does. You wouldn't know that unless you combine this data into a spreadsheet. And so anyway, let's go to portfolio. We have a 14% max drawdown. It's pretty reasonable. If you look at the rules tab here, I have a list of the average calendar year returns and intra-year drawdowns of the S&P 500. So if you just bought and held ETFs, you would have been looking at multiple drawdowns exceeding 14%. I mean, the average drawdown here is quite horrible, really, it's horrific. 48%, which is obviously from 2007, terrible drawdown. If I lost 48% of my trading account on a strategy, I would be pretty concerned. But 14%, I can handle 14%. I'd like it to be a little lower than that if I can manage it, but 14% is fine, 20% is fine. I can stomach that because I have a high risk tolerance. I'm young, I'm making plenty of money for my lifestyle. I don't care if I lose 20% on my way to make, where was it? Portfolio, 130% return over a couple of years. It's pretty good considering I'm getting, I think, maybe 2% interest on my savings account in my bank. I don't even bother saving money anymore. Whenever I have money, I invest it in something, either my stock portfolio, my trading, my Forex trading, or crypto, or I spend it on things I need. I do not leave money burning in my savings account no more than I need in order to cover an emergency. All of my assets are pretty liquid, so I don't really care. If I need money quickly, it wouldn't take me longer than a day or two to get a decent amount of money into my hands. So yeah, anyway, that's really it for today's video. I just wanted to show you guys how to quickly combine strategy data into a testing spreadsheet so that you can check your max drawdown. I'm sure that if I added up all of these markets into one spreadsheet, the drawdown would be surely a lot higher than this, because a lot of these pairs are correlated. CAD Yen will be correlated to some degree with Swiss Yen, so will Euro Yen, Pound Yen, New Zealand Yen. Even though this strategy performs well on all of these yen markets, when one encounters a drawdown, surely the others will likely do as well. And so that's something I need to check, and this is how I'm going to do it. And maybe I need to cut out a couple of yen pairs and just pick the ones that perform the best, maybe two yen pairs, the best ones that had the best drawdown and total return together. Maybe I'll throw them onto my automated trading system and see how that goes. But I certainly don't think I will want to trade all of these yen pairs. Maybe I'll be surprised. Maybe I'll throw them all in a spreadsheet and they do fine, but I doubt it. And same with all these euro pairs, euro Aussie, euro yen, euro dollar. I'll need to check how these correlated pairs perform together before I feel comfortable throwing them all into a system to be automatically traded. Plus, as I mentioned earlier, this script takes a trade at the same time of day on all of these pairs. So I can only trade a couple of markets anyway with this strategy without risking margin calls frequently. So I need to be careful of that as well. But I'll figure that out. I'll just probably trade 2 or 3 markets here, maybe 4, because I'm using Pine Connector with this particular strategy. I can set up Pine Connector to only allow it to execute X amount of trades. So I could say only open 2 trades max or 3 trades maximum. And then it doesn't matter how many alerts I set because if it receives more than 3, it won't take all of them. But then I have the problem of inconsistency seeping into my trading because I don't know which markets will be executed first. And so it's probably best to just keep a small portfolio of 2 or 3 pairs trading this strategy. And depending on what I find out through my own automated testing on my actual live account, I'm using around 10 grand on an actual live account at the moment, testing this stuff. It started with a few grand and it now has bumped up to 10 grand as I get more confident with the system and I'm seeing that it can handle itself without catastrophic implosions. But I'm still not comfortable going any further than 10 grand at the moment just because I need to track my max drawdown and see how the strategy handles bad times, correlated bad times. I need to see how a bunch of markets perform together when they are going through a rough patch. That is what this technique I'm showing you today will help me figure out. Through my backtesting results, I can check which pairs are terrible together and which pairs complement each other. Sometimes you'll merge 2 pairs together and your total return will increase and your drawdown will actually decrease because when one pair is losing, the other pair is winning. And so it's important to do this process for both protection of your capital, protection of your risk, management of your risk, and optimization of your return. Because if 2 markets increase your return but lower your drawdown, that's going to probably be better to trade than trading 2 markets that have an outstanding return but their max drawdowns also complement each other and you have a larger max drawdown. One way to think of it is waves in the ocean. I'm sure you've all seen, those of you who live near an ocean, I'm sure you've seen times when 2 waves hit each other from opposite directions and they form a super large wave. It's the same with trading and drawdown. You don't want 2 markets that have a drawdown that overlap with each other too often, or at least not too many markets doing that too often, because you can see some pretty outrageous drawdown levels if your pairs are too correlated in that risk metric. Anyway, that's it for today's video. I hope you found this interesting. It's a pretty cool technique. Again, use it at your own risk. It's obviously flawed because we haven't gone through and checked every single trade here. There could be trades that might have lost that were counted as winning trades. As I mentioned earlier, maybe your stop loss was actually filled, but price never technically touched it on your chart, and so your script didn't exit or count that trade as a losing trade, but your spreadsheet did count it as a winning trade. That's a problem you need to watch out for. Not super frequent in my experience, but it can happen, and depending on the strategy you're using, it could be a big problem. So keep that in mind. Another thing worth mentioning is that Pine Script is terrible at simulating intra-bar price action. So on a trade that hits your take profit and spikes up to hit your stop loss on the same bar, if you get a giant bar with a huge wick and the candle hits both your take profit and your stop loss, sometimes Pine Script and the strategy tester will count that as a winning trade. And when you drop down to a lower time frame and go back to that time of trade, you'll see that price action actually did it in the opposite direction. It played out in the opposite way. It hit your stop loss first and then your take profit, but the higher time frame strategy tester counted it as a win. That is a problem. Again, not super frequent, but depending on what type of strategy you're using, could be a huge problem. So keep that in mind. Anyway, I'll wrap it up here. I covered this information pretty quick because it's a weekend here. I have family over, but I wanted to get this information out as quickly as possible. So I hope you found this interesting. If this is all new to you, the spreadsheeting and all of this stuff, you might need to watch this video a couple more times, but I'm sure you'll get the hang of it. It's not that difficult, a bit of practice and you'll have this down, and it will save you a heap of time in your backtesting process, at least that initial stage of picking which markets to further investigate. Manually, I mean. It would be a good idea, even if these metrics turn out good, to manually confirm and go over at least a few hundred trades and just make sure that there's no glaring issues with your script and that the data is at least 90% accurate. That would be my advice, and that's personally what I like to do in my own trading. I don't mind a little bit of margin of error as long as my metrics look solid and that margin of error isn't going to result in a winning strategy actually being a losing strategy. Anyway, that's all. See you in the next lesson. Good luck with your trading.